jobs data Armageddon coming in next week. Let's talk about that and how it's going to impact us in the markets during the worst month of the year. So first of all, go ahead and check out our channel memberships. We got some great stuff going on in there in the stalagmite level, especially with those real-time trade posts and members-only videos. But if you want to also support the channel at lower tiers, we've got Soda Straw and Stalactite. Get badges, you get emojis, priority reply to comments, member shoutouts for Stalactite, and early access to videos while they're processing up to HD. So you get about a 20-minute head start on everyone else. Go ahead and check those out right now. And also go ahead and comment if we're going to get September this year, or if we're going to continue to chug along, going on the upward trend we have been for quite a while. What do you guys think? What is everyone? What's our positioning here? Are we thinking that September is going to be quite bloody and terrible, or do we think it's going to just find a low early on in the first week or so, and then just chug along through Q3 like it's nothing, like we've done so far for the year for the most part, aside after that the tariff scare in April. All right. So anyways, let's take a look here. So first of all, the most important thing right now, in my opinion, is going to be jobs. Why is it going to be jobs? Because that's the only way that the current administration is going to get their rate cuts. All right, it's the only way they're going to get their rate cuts, because we know that inflation is still too high for the Fed to act, and it's been too high for them to act, or at least they claim it's been too high for them to act. Now, this could be, some people are suggesting it's a controlled demolition of the economy and causing a 2026 recession. These are things that have been floating around on my radar, and I am somewhat agreeable to the idea that we could see a recession in 2026. So, or at least a significant drawdown similar to like 2022, something like that, even though they'll be cutting rates at that time, probably aggressively, but that might be the thing that triggers that type of sell-off. Anyways, we're going to talk a little bit about that right now. So inflation, not low enough for the Fed. Jobs, though, we've been getting really significant revisions lately. In fact, the last two revisions have shown that the data has been off by 90% or more. 90%. Okay, so they only created 10% of the jobs that were reported. How you can be that far off, I don't know, unless it is possibly, again, by design. But we have on the 9th, September 9th. All right, we're going to get the year-end revision of jobs data for the fiscal year 2025, which is like March to March for some reason. I don't know why. But they're going to do that, right? Okay. Or is this just the first quarter? Okay. Year to date. Excuse me. It's the year to date first quarter revision. All right. First quarter revision for that on September 9th. If these numbers are terrible, and it's in the favor of the current administration for these numbers to be terrible, and I'll tell you why in a second, plus the person in charge of this place now, right, in charge of the BLS, has been fired and then appointed by a person that's going to likely be more favorable to the current administration. Okay, so keep that in mind. And the current administration wants to see a couple of things. They want rate cuts because the government needs to refinance trillions of dollars in debt. Okay, and the rates are way too high for that right now. And the Fed hasn't been budging on lowering rates. And they said that they will ignore slightly raised inflation if the jobs market falls apart. This is the job market falling apart. The last two revisions is the jobs market falling apart. And this report is a perfect opportunity for there to be a jobs Armageddon to force the hand of the Fed to do rate cuts. Possibly a much bigger one than 0.25. We might see a half a point cut. We might even see a historic cut larger than any of us are expecting right now. Am I calling for that? Not necessarily, but we'll watch the CME Fed Watch tool here going forward to see how it changes after this report. Okay. We also got this week. All right. This week we've got ADP employment on Thursday. Initial jobless claims as well on Thursday. ISM services is going to be coming in as well. Those are going to move the market, not insanely, but they'll move the market. Okay. We also have job openings showing up on Wednesday. That's going to be a big one. Fed Beige Book also makes some waves. Today we've got ISM manufacturing that's going to come in. I don't know when. Should come in about 15 minutes, so I won't get it on this video. But that needs to get above 50 to kick off anything. It's been stuck under 50 for like since 2022 now. It's pretty amazing how long it's been under there. And that is that. All right. So important jobs data coming out next week. A little bit of it leading in on this week. We've already got a minus 1.2% day on the SPY. Now, I did that, but I did that a little bit wrong. So let me make it a little bigger so I can see it a little better. And I'm on a trackpad, so it's not great with accuracy. There we go. So average drawdown, we're trying to look for about a 7%. All right, we're looking for about a 7% drawdown right now into September, October to give us that average pullback for the year. That would take us from where we currently are at 650 down to almost $600. And I think that's going to happen in rapid succession. I think it's going to happen immediately after that September 9 report. And then when the Fed meets and cuts rates, I think we're probably going to see a sugar rush into the market as everyone goes, oh, the Fed's here to save the day. They're not going to let us crash. And then we might see that kick off a rally that lasts through possibly the end of the year before we start seeing any of the real cracks start to come. So that's what I'm looking at right now. I'm looking for a potential like 7% drawdown in the SPY, which could be bad for Bitcoin. I don't know. Bitcoin's been kind of a wily one lately. All right, so that could be bad, could be good. We see Bitcoin actually, it had a bit of a flush this weekend and is coming back now, which is good. So we're up 1.3% while the SPY is down. But so Bitcoin might be up. Bitcoin might be up in all of this. So we're watching that very carefully. I've been trimming any positions that are elevated risk or in profit right now because of this specific setup. Okay. And we're looking at NVIDIA. NVIDIA goes under 70. That's going to be bad. Let's take a look at this one. MAGS plus ORCL plus PLTR plus AVGO. This is my new favorite chart right now. And it is popping up a little bit. So not too bad. Not too bad. While the SPY is down, the 10 drivers of the entire economy right now are actually up. So that's actually a good sign there. I'd like to see it not roll over, but this is still looking very much like a textbook bear flag. So I am still somewhat cautious of this. How's Palantir this morning? Which one of these is holding it up? Because it's not NVIDIA. It's not Palantir. And it is not AVGO. So why was that? Oh, well, I guess it wasn't up, wasn't it? It was driving up from a fall. So it's still a little early for me. Yeah, it's down almost 1%. So that makes sense. It's down almost 1%, but it's driving up. While the SPY is still trying to fall or at least find a base down here. That was a pretty decent gap. But like I said, I'm expecting something around maybe a quick dip to 600 and then launched through the end of the year, and I'm acting accordingly. So will I be selling any of my Bitcoin miners? Maybe. It depends on how they perform going forward. I might simply consider white knuckling through the volatility and buying more on the dip. And those in stalagmite will learn of that as it comes. I'll be looking at these very closely, and especially Bitcoin and how it's performing to get a sense of how I think this is going to go. But we're up right now. We're up. So that's not bad. We're up. And I could see it coming out of this. So it broke this line, right? It broke that one. So let me redraw this one up here now. And it's starting to break that one too. Starting to break that one too. So we could see Bitcoin kind of, this could be the low. And I said I didn't want to see it go under 105 on Bitcoin. This could be the low. And you can see RSI's crossing up. Stochastics are looking like they're starting to poke up. BX is showing weakening selling pressure and a green dot. So we could see this thing come flying out of here. And that would be ideal at this point in time. That would be really ideal, honestly. Let's talk about real quickly about two plays I'm looking at in the Mag 7 that are very interesting to me right now. One of them is Tesla. And this is very textbook. I brought this up to the members, and I'm going to bring it up here now. And the members will know exactly when I act on this, but we had this pennant, right? We touched 1, 2, 3, 4, 5, 6, basically 7 times on it. And then we came out, broke out, and are testing it from above. As soon as we start breaking out above 340-ish here, right? Let me just draw this above like 340, 350. As soon as we start getting above that area, I'm looking at $400 for Tesla very quickly by the end of the year. That's what I'm looking for. Now, as we have larger macro things causing problems, look at September 8th. I need to move that to September 9th. There we go. September 9th. I'd be looking for this to do a significant move up to 400, maybe even 420. I think probably 420, just because that is a very relevant number for Elon and his followers. And I could see them totally pushing it up there to that, just because they would. So I'm watching that very textbook retest from above, and it is starting to bounce. Look, it is bouncing. So I'm looking for a little bit more confirmation on this one, and then I'd be looking to go into Tesla. And if you're in stalagmite, you'll learn exactly when I do that. Apple is another one I'm looking at. So this could look to some people like a double top, right? A double top. And it totally could be, because this is looking very bear flaggy right here. And if it breaks to the downside, it's going to come all the way back down to about 211. I would take that move down to 211 as a buying opportunity. And we could get that around that September 9th date. Okay, I'd be taking that 211 as a buying opportunity if it gets there and it bounces. Of course, it needs to bounce. I'm not going to just buy it as soon as it touches 211. I'm going to look at what it does. Like, see, like these candles back here where it came, it touched it, it bounced, and then we had that big green one with huge volume, and then it just kept driving higher from there. That's what I'd be looking for. I'd be looking for it to come down, touch, give me a big green one that goes above this trend line here, and then I'd be like, all right, time to roll. 260, here we go. That's what I'll be looking at. Google is one more in the Mag 7 that is outperforming, and it is on a heater right now, and it is kind of hugging this line, kind of breaking below it and then back above it every so often. So I would be looking at this one to potentially make a move back. Let me throw a fib to give you an idea of where I think it's going to pull. Probably like 201, maybe even as low as 200. And then I'd be looking at Google again there. NVIDIA, I want to see it hold 170. It did open up below 170. It did, and then drove higher. Yeah, if I want to see 170, it's got to hold 170. AMD, I really want. I don't even know what to say about AMD. I'd be looking at it maybe to come down to 143 or so, or break this trend line. One of the two. It's got to do that. Intel, we're not going to talk about Intel. It's terrible. No, it's not terrible, but it upsets me. BMNR is another one. It's up 2% today. That's cool. That's really good. I like that. I'm very happy with that. I'd like to see it drive a little higher. We'll see. Bitcoin miners, how are they doing? Let's see. Everybody's favorite wolf right now, still charging up a little bit more, holding this flag. I like that it's holding that flag. That's showing a lot of strength. Let's take a look at Hut. Hut pushing up a little higher, showing a lot of strength as well. I like that. Hive actually showing less strength, but same pattern. So I like that too. Bitfarms also up today, surprising. I did roll these out. I want to see this push up to 171 and eventually $2. That's what I really want to see out of that one. I ran up another 7% today. Look at this. Okay, so look at this. It closes above 28.98. Iron is going to go up into the 40s. And that's just that. Mara up 2% today, trying to get out of this base. Once Mara gets out of this base, it's going to come out like an explosion. So pay close attention to that. CleanSpark also showing a good showing today, almost 3%. It's trying to get above this trend line. I really want to see it get back above this blue line. I want to see this look. It's kind of looking like, I bet you if we went into lower time frames, we'd see a head and shoulders right here. Let's do it. Let's go look at that lower time frame real quick. Let's go like 2 hours maybe. It's ugly, but it's there. Yeah, you can see it just kind of like boop, shoulder, head, another shoulder, and then once we get out of that thing, boom, we could push up to like $11 pretty quickly off of that. That'd be pretty nice to see for CleanSpark right now. They really need to get their act together in that respect. Give us something to latch onto as investors, something to get excited about. They really just haven't given us anything to be excited about for a while, and they've really got to bring it now. Let's see, is there anything else I wanted to talk about? I really just wanted to bring attention to the revisions coming through on September 9th. Be aware of that. That's my caution. That's my expression of caution that we might see an initial like first half or maybe first 2.5 weeks leading into the Fed meeting a dip, and possibly a significant one off of these revisions, because it just plays into the narrative of what the current administration wants and the way that they need to get what they want, because the only way the Fed is going to cut right now is if the labor market deteriorates, and this is a perfect opportunity for the labor market to deteriorate. They've also given us hints in the last 2 revisions of 90% down that there is likely more significant revisions to come. So that is my theory right now. Go ahead, let me know what you think about that. Does that make sense? Is that something you're also thinking? How are you going to react to this? Are we going to just hold through it? Or are we looking to try to sell winners? Trim bigger winners to protect profit, trim losers to prevent further bleeding. Are we just going to hold through it? What's the ideas? I'm kind of on the fence. I'm thinking I want to take profit quickly because the market's been, very kangaroo up down all around this year, and honestly it's a little bit exhausting. So I would like to sit out some of the greater volatility if I could, just for my own mental health. But of course, I also know that getting back in is a much harder proposition than getting out. So that could also bite me on the opposite end of things. So anyways, that's all I've got for you today. Please like, comment, subscribe, share this video. Those things do so much to help the channel. We're really trying to grow. Check out the channel memberships, especially that stalagmite level, and have a profitable day.